Hello, everybody. Like she introduced me, I am Tice Morgan. I've been an information security practitioner for roughly 30 years, worked for some heavy hitters in the telecom industry, done some consulting for a large financial institution, and have also worked for a large healthcare and currently work for a large private insurance company. So a little bit about our organization is, like I stated, we are a private insurance company located in Oklahoma City, Oklahoma. We primarily focus on supplemental healthcare and benefits insurance to different organizations, primarily in the education sector. We're a pretty small company, worth about 1.5 billion, 1.6 billion in revenue. But like a lot of organizations, we have a wide variety of compliance, governance, risk related challenges. And so a couple of years back, well, let me back up a little bit. So this will actually be my 5th GRC implementation with American Fidelity, not for American Fidelity, but I've done 4 prior to coming on board with American Fidelity. I've been with the organization about 4 years. And during that time, it's been a little bit of an enlightening experience for me. So I will admit, prior to purchasing an implementation of MetricStream, I am a long-term Archer user and have been using Archer since the Derbyshire days. And so when we were looking at evaluating products, I knew the pros and cons with Archer, and I wanted to try something a little different with our approach. And so going through a quite exhaustive RFI, and I will always tell you guys, if you can forecast it, don't ever try to do a request for proposal during the pandemic when everybody is not in the office, because your collaboration is really going to go downhill quickly. But at the end of the day, we chose MetricStream, and that's primarily to address 2 main functions for our organization. I am a big fan of the crawl, walk, run approach, and so I wanted to walk you guys through a lot of the steps that we have done. I don't think any of this is going to be super enlightening for you guys, because I'm sure many of your organizations have a lot of the same issues that all of the organizations do have. So with that stated, a lot of our GRC needs were associated with simplifying our compliance program, but also looking at how we could better control or at least assess our third parties. Some of the other elements that we had was we needed the ability to easily communicate compliance objectives. Now, I will always stress that one of the most difficult things in implementing compliance programs is getting the organization to take ownership in a lot of cases. And what I mean by that is that a lot of the struggles that the operators within your ecosystem and infrastructure have is that they don't have a security mindset or they don't have a compliance mindset. So to give you a really good example, all of my IT guys, especially my security operations teams, always say, we're doing all these things. We have threat management, we're doing vulnerability management, all that. But then when I come knock on their door and say, okay, show me how you're doing it, it's like, well, you know, we got to go here and here and here and here and here and, you know, pull all this. And then the other element of that is that if I come back to them a month later and I talk to the same person, I'm going to get a little bit of a different story every time. So part of the challenges that we've had overall, and I think generally across our entire ecosystem, is getting ownership for control owners to really understand the fundamentals of what a control statement, an objective, and the efficacy of that control is. So with that stated, our GRC program today primarily focuses on third-party risk and on IT compliance. When I first started with American Fidelity, because, and I'm not trying to be funny here, but GRCs are always a journey. I know that's been the recurrent theme for this conference, is that it's a journey. And it really is. And I remember distinctly, probably about 6 weeks into my career with American Fidelity, telling my boss, I report to our chief security officer, that this is a 7-year program. There's never really an end to it, but to get this to where you think we need to be is 7 years, and we're going to have hiccups along the way. And I think all of you folks that have implemented any kind of compliance program, any GRC, especially on the risk side, will definitely agree with me that it's a never-ending battle. One of the other factors associated with that is that we at American Fidelity have, and I'm sure many of you as well do, have a pretty complex legal entity structure. And to give you an example, So because we're privately held, we have to account for what's called model audit rule, which is effectively a Sarbanes-Oxley equivalent for private insurance companies. And it's mandated effectively to implement similar to 404 controls on financially significant systems, of which I believe we have about 17 financially significant systems. But what's interesting about our ecosystem is that while we are primarily US-based, because of the complex legal entity structure, American Fidelity actually runs the network for a lot of our sister and other entities, or our partners, under the American Fidelity Corporation flag. So with that stated, we also have an investment arm and an annuities arm, and so I also have to worry about the Security Exchange Commission, and I also have to worry about FINRA regulation. And then the other element is because we are an insurance provider and we are consuming sensitive, protected health information, we also have to accommodate for the Health Information Portability Accountability Act, HIPAA. The last element, which this one has been new for me, is the Bermuda Monetary Authority. So a part of our division, which we call AFIBL, and we're actually building an office here in Miami. Not why we're here, but we're kind of hoping to get to tour that facility. But effectively, that part of the business focuses on selling life insurance products to high net worth individuals, primarily in South America. I had never actually heard of the Bermuda Monetary Authority until I'd started with American Fidelity. What is really consistent about all of these regulations, and I'm not even going to go into all the states and the privacy stuff, so back up a second. We operate in 49 states, New York being the one state that we don't operate in, and I'm sure you all can guess why. But unfortunately, we are looking at opening up an office in New York, so DFS is going to come into play. So I do definitely pity the more traditional financial institutions dealing with NYDFS, and those guys are definitely a whole nother breed of animal. What we had looked at is that I'm answering the same questions for each of these regulators, sometimes on a quarterly basis, sometimes only on an annual basis. And so in a lot of cases, we really wanted to look at a compliance framework that we could customize that would allow our organization to harmonize these controls. So use once, or I'm sorry, state once and then use many times. And so with that stated, I had sold the organization on leveraging the high trust with some components of NIST CSF, and I'll go into a little bit of detail. So for high trust, the majority of the controls aren't necessarily as prescriptive as PCI is, and you'll notice PCI is not on that list. We've managed to dodge PCI since I've been there. Don't know how much longer we can do that, but we've basically outsourced the majority of those components with our PCI program. But with the other programs, that harmonization basically states, do you have an information security program? Do you have policies? Do you have procedures? Do you do control testing? And then you follow certain mechanics. MAR is a little bit unique because it really only cares about some of those, what I would consider enterprise mechanics, such as identity access management, access control, access reviews, change control, things like that. But it really only cares, like SOX does, on financially significant systems. So in a lot of cases, a lot of the components of high trust give us the opportunity to have a one control satisfies multiple objectives. And I just really appreciate the way that their framework maps that. I will volunteer this, and I don't know if anybody really keeps up with this, but there's I don't want to say they're new, but there's a security controls framework concept that's coming out now. And they've actually been doing a lot of work that's very similar to the high trust mechanic, because the high trust mechanic actually maps a good portion of a lot of their controls across a lot of these ecosystems, and then gives you a pretty succinct statement that generally is in a meet or exceed language. And so if you tend to use that and leverage that as your control objective and then have your control derivatives for your applicability to your organization, you can leverage that. We use NIST CSF primarily to measure the information security program at American Fidelity. It's only a couple of domains, whereas high trust is 13 domains. One of the really good things about at least our function where I sit is that we do have a close partnership with our privacy team, but we don't necessarily have to deal with the privacy controls. So I just really wanted to kind of give you guys a little bit of an outline about our program and a lot of the things that we are trying to tackle. So with that stated, we obviously had some challenges and some opportunities, basically asking those questions about what is it that our program really needs to do. So I know everybody uses this to death, but that single pane of glass is very important. The other element is also being able to change the organization's approach. I cannot stress how many times organizations really don't understand when they're biting off a GRC implementation. They think a tool is going to solve so many of the problems. And the other element of that is that there has to be a cultural aspect to any of these programs. And I'm sure all of you guys are well aware of that. But that was one of the big challenges that we had, was working to, and I'm not saying we've changed it, it's a collaborative approach and it's an iterative approach to changing the culture and the mindset of our corporate executives. The primary thing about it, and there was some discussions yesterday about this, is that you have to be able to enable certain functions of the organization to embrace their ownership of the compliance program and of the risk elements associated with those programs. The board cannot do all of these activities. And like any large organization, we do have a board, and our audit team, our security team, and our legal compliance team, who oversee our MAR program and our privacy program, all report in through that board mechanic. The other element of that is also establishing confidence in the program with transparency. What I mean about that is that earlier I had stated that I come talk to somebody, say on a vulnerability management control, and they give me all this information and tell me all of these things. And then I talk to the same person a month later to go retest that control, and they're telling me something different. Having a consistent approach to the control and a consistent expectation of the evidence has really been a challenge for our organization. And part of that is our ability to tailor our control efficacy and the frequency in which we both operate the control and test the control to help build that confidence and also that transparency component. So to give you a pretty good example, let's use identity access management. So everybody's always bringing a new employee, well, usually bringing in new employees, transferring employees, and then also terminating access, either a voluntary or involuntary separation. In a lot of cases, for our organization, we actually have a pretty robust identity access management solution. We use high-end technology to help manage that. But at the end of the day, is that a security function? Some of it probably is, but what we found through a lot of our discovery is that the majority of the hiring process is actually an HR function. But in our case, our HR function doesn't necessarily control access. They don't control a lot of the aspects of the new hire process. And so to attribute that to testing that control on an efficacy basis, when our MAR team comes in to test that control, they're going to test it once a year. They're going to do a small sample set. But if we look at the volume and some of the issues that we've had, like any large organization has, there's always certain things that slip through the cracks. If they happen to sample one of those slip through the cracks, that control is going to fail for that year. So what we are actually in the process of implementing is a monthly control testing component, so we can at least catch that up front. And it's been very helpful for us. I will definitely tell you that we are sort of dragging the organization kicking and screaming along with us in some of these ways, and there's been some questions about who really does own certain things. But one of the things that we found very vital to this, and this is definitely an opportunity, is make sure that you, as an organization, understand a lot of the mechanics of your processes. If you understand a lot of the mechanics of your processes, then you can trace that from end to end, and through a swim lane exercise or something attributable, you can effectively assign ownership at certain points of that, and then break those controls out and test those in a unique, particular way. At least that's what's worked for us, especially on the identity access management side. In some cases, controls that we own, there's a little bit easier to test, but any of those ones that have more of an enterprise focus or that have a couple of key players in those, we found that transparency component and showing them what it is that we're really trying to do, how they have skin in the game, how they can help us, is really paid off in dividends. It really has. So part of the approach that we took was that in a lot of cases, we needed to really identify all of those earlier regulatory compliance objectives that we have and break those into the sum of their parts. And part of that was that control harmonization process. Control harmonization frustrates me sometimes because there's so many frameworks that are available. And I believe it was Gavin earlier stated that you really need to look at things in a more simplistic approach. You need to look at what is it that you're doing that applies across the board or that can be condensed or correlated into meeting multiple regulatory or compliance objectives. And that was actually a struggle for us because there are a lot of things that we do as an organization that we wanted to wrap controls around, but really didn't buy us a lot of value. So a good example is everybody here probably does pen testing every year. All the regulators want to see that you do that, but you only do that once a year, generally. But you operate your vulnerability management program, both internally and externally, a lot more frequently, generally. So with that stated, in a lot of cases, we do want to take credit for that pen testing control and show an external entity that's asking questions that we are taking security seriously. But at the end of the day, if we're passing that one control and it's a quick checkbox, but we're still failing identity and access management, from a risk postulation perspective, where's the bigger risk to our organization? And where's the bigger risk to what compliance objective we're probably not going to meet? The other element of this is, and this is really kind of funny because we are an insurance company, but we do take cyber insurance very, very seriously. And so through the course of obtaining our most recent policy, which unfortunately we're about to renew here in a couple of months, and it's always a really interesting exercise because we get some, of all of the regulatory inquiries or all of the inquiries that we get, the insurance companies are asking the most direct questions and wanting the most evidence. And this is an opportunity for us within GRC platforms and a programmatic approach to that to really look at how you can reuse a lot of the activity instead of everybody scrambling to try to meet a 2-month deadline to get all of these questions asked for their particular entity that they're trying to respond to. In our case, it's a cyber insurance policy renewal component. The other thing about it is that bottom point, that evaluate every so often to assure agility and need, is something that I think you always have to have within your program. So there is a running concept that we've introduced at our organization because we are a pretty agile company. We have a saying in our organization, it's cloud first, not forced. We do have a high development ecosystem, so we do a lot of custom development in our ecosystem too. So we're pretty IT-centric, IT-heavy, always looking at automation. We have RPA components. Like many healthcare and insurance providers, we're investigating artificial intelligence and things along those lines. But one of the elements about that is the ability to be agile. So in a lot of cases, I think a lot of organizations, mine included, have invested in technologies, and it's sort of like a game of Texas Hold'em. You get to a point to where you're pot committed, and you're gonna ride or die on that platform. And we've been evaluating scenarios where having the flexibility to modify technology to meet our needs and be more agile and more efficient in our implementation of those technologies actually gives us a competitive advantage because we're not going to be stuck with riding, well, I hate to say it this way, but basically whipping the horse to death. You can modify that platform, adapt it, understand the requirements for your organization, and apply those in a really quick fashion. And so that agility and having the teams that can work on those projects and get them implemented really quickly, it may not be a 100% perfect solution, or it may not go as smooth. I mean, I don't think anything ever goes as well as you would plan for it to. But in a lot of cases, being able to consider the implementation of these things and that agility component gives you a lot of flexibility. So as I had indicated, our ecosystem deployment, I wanted to start out really small. So the last time that we had purchased a GRC platform for another large healthcare organization, they bought everything, audit, BCM, compliance, policy management, all that stuff. And I didn't want to do that this time because generally you're not going to get an ROI when you're paying, $250,000 for a platform and you're only leveraging 2 small components of it. And that's one of the compelling features with the MetricStream platform that's really helped us enable our organization to be a little bit more efficient and a little bit more consistent about how we do support our compliance and our third-party program. So we started with TPRM, and that was a pretty quick deploy. I'm not saying that we leverage a lot of automation components. We're still in a lot of the early stages. Although we have had the platform since 2021, we've been really cautious in how we roll this out to the organization. And, you know, like maybe some of you, but probably not a lot of you, we're not really a very large organization. I think overall we employ roughly 4,200 people across the United States, and then various other locales across the country. So we have a pretty condensed ecosystem within the Oklahoma City area. So the majority of the people that I have to interact with are in my building. I can just go walk and talk with them and stuff like that. So that's definitely been a benefit for us. The other element of it is that for IT compliance, it's definitely more of a long-term strategy for our organization. And part of that is that the ecology is changing, the ecosystem is changing, especially on the privacy side. Obviously, the West Coast is really implementing a lot of things that are interesting from a privacy perspective, and the states all have their own regulations. It was interesting to listen to Mr. Rasmussen with all of the things going on in the UK, and you know, for us US-based entities don't have to deal with that, thank goodness. But I do pity you folks that definitely have to comply with a lot of the EU directives. But I think the United States, from a state's perspective, especially on the privacy and the personal data ecosystem, is definitely moving into that direction. California is probably leading the way. Oregon and Washington, and to a lesser extent Nevada, are probably, you know, definitely right on their heels. So the other element of this was the implementation rollout. So everybody always stresses communication, awareness, training, and those are critical. But one of the key things that we found as part of this is that, and this is actually causing us to a little bit rethink, not necessarily our deployment, but potentially moving a module purchase in front of another module purchase, because we were looking at potentially implementing the risk module. But after thinking about it, the policy module might actually be a better module for us. The reason being is that you can't really hold people accountable for things if they don't know about it. And one of the interesting tidbits that I'll share is that when I first came to the organization, they had a lot of policies on our operational side, but they didn't really have a lot of policies on our compliance, especially our technology compliance and our infrastructure policy, information security policy side. And so we've been working to shore up a lot of those gaps. Some of those are related to having things that support a lot of the control ecosystems that we're trying to accommodate for. The other thing is soliciting feedback from the user community. The real key driver there is that we were trying to enable the organization to self-serve themselves and to be able to have control ownership more at the process level, and then have them do a lot of their own control self-assessment activities, and then we review it. That was probably a little bit of wishful thinking on our part. So what we've done is we've changed strategies a little bit there to effectively provide the compliance analysts a little bit more flexibility in how they can consume the evidence, but use it as an educational opportunity to solicit that input from the community. You say you're doing these things, give me some tools, give me some processes, give me some mechanics so that we can actually paper the control. What I mean by paper the control is provide the evidence, the efficacy, is the control designed effective, and is it operating as intended? So from a key learnings and best practices perspective, one of the things that I always stress is keep it simple. I think we had 137 controls when we started, and we've been able to whittle that down to about 60 key controls that primarily address the majority. There are always those one-offs, and we do accommodate for some of those. But I think those should be more of the exception versus the rule. The other element is that explain, educate, collaborate, and then automate. I will admit that I look at automation in two ways. There's always the technology automation components, system-to-system interaction, API integration. Those are all good, but in a lot of cases, automation can also be just process efficiency and some of those human elements. Why do you have 6 people doing something when 3 people can do it if they all fully understand? And then also, we call it building bench strength, but basically building cross collaboration amongst your team so that you don't have Joe or Susie are the only 2 people that can do that. Obviously, there's some resource constraints and some capacity issues that you have to consider, and we've had to adjust a little bit, but basically sharing the love or the pain, depending on how you want to look at it. The other thing is best practices, really understanding the mechanics of what it is that you are trying to assess. We're a storied organization, and a lot of the culture has been, we've always done things that way, and I'm sure many of you guys have ran into this. I think that was a recurrent theme with the NCUA presentation earlier today. And so getting these folks to really embrace that change, I don't want to say it's been a struggle, but it's definitely been a challenge. And with challenges, there are definitely opportunities from those perspectives. The other element is the IT general controls should follow a 60-20-20 rule generally. What I mean by that is that it goes back to, I think Gavin had it on one of his slides, is there are things that you want to do, there are things that you probably should do, and then there are those things that you must do. And that 60% of those things that you must do. There is a lot of common criteria and consistency across any regulatory agency compliant objective on key foundational elements. In our organization, we generally call those IT general controls. And then we'll have specific things for things that are a little bit more threat focused, like incident handling, vulnerability management, things along those lines. And those are usually that other 20% of that control. And then there's probably 20% of the controls that you're doing that really don't apply. The other element is also identifying key source systems and reporting requirements. I really can't stress this enough because in a lot of cases, there are a lot of systems, and I know that's been a recurrent theme over the presentations that we've heard too, in getting the data out of those systems, because the GRC platform that you're implementing is only a component of your overall compliance organization. It really is. And so there's a lot of systems that are going to be source systems. You have to assign a confidence level for those, but generally looking at how you can leverage that information and reuse it is very consistent and very helpful for your program and your platform. So I'm sorry, I'm running out of time here. So the business value and realized benefits here. So our motto at American Fidelity is that we're a different opinion, which is interesting because I spoke about some legacy cultural related issues, but we tell our customers we're a different opinion. And so we've been actually turning that around in our organization and saying, look, there's a different way that we think we can do this. We're not saying you have to do it the way that we tell you to do it, but we're offering some opportunities to have a discussion to say, how can we make this a more efficient, refined, or more organized process or compliance component, et cetera. It's actually afforded us the ability to tailor our question set and our procedure mechanics in a more intrinsic way where we are able to derive the evidence that we need by asking core critical questions. So instead of saying, do you have a vulnerability management program and is it effective? We have, I think, roughly 7 questions for our vulnerability management program that allow us to get that evidence, but also give our assessors a little bit of leeway on how they can interpret that evidence. I do want to caution that leeway on that interpretation component because you do want to have some specific artifacts that are outlined. We found that to be very helpful. So this is the source system, this is the key reporting mechanics, and these are the trends or the information or the data sets that you're looking for that help support your assertion that that control is in fact in place and operating as intended. The one thing that it does allow us to do is facilitate that continuous control monitoring. So in a lot of cases, we are working to test controls on a monthly basis. So that way, even though our external regulator is going to do it in a quarter or on a yearly basis, we know in advance that we're going to have an issue with that control. We can go do the awareness, we can go do the communication, the training, augment that control or refine that control to make sure that evidence is going to be good for us. So we catch it before the regulator or our internal audit or our MAR team basically assesses it. And it also allows us to reduce our overall control expectations and the ability to reuse controls for certain things. So we basically have, actually I'm over time, so. My flight's delayed, so we're actually going to be here longer than we thought we were. I'm happy to answer any questions if you guys have anything specific to my presentation. So thank you guys very much for your time. I really do appreciate it.